If you're looking to get started with investing in stocks, Robinhood is one of the best options because it's really user-friendly and completely free to use. In this video, I'm going to show you how to get started with investing on Robinhood, from opening your account to buying your first stock and beginning to grow your wealth. I'm also going to give you a few tips for making your first and future stock purchases on Robinhood, because there are a lot of ways you can go wrong if you're not careful, and I want to help you make sure you get a healthy start to your investment journey. So whether you're new to investing or just new to Robinhood, stick around and we'll cover everything you need to know. So first, I'll quickly cover the sign-up process for Robinhood so you know what to expect when opening your account. And you're going to need just a few things to create an account and get started. First, you must be a US citizen living in the US, you must be 18 years old, and you must have a social security number. When you have this information available, you can download the Robinhood app and submit your initial application to open your account. And by the way, if you haven't created your account yet, make sure you sign up using somebody's referral link so that you can get a free stock valued up to $500. This is at absolutely no cost to you. It's just a free way to kickstart your account that you can't get if you sign up without a referral link. So I'll put my referral link in the description just in case you need one, but don't miss this opportunity for a free stock. Anyways, after you submit your application, you should hear back from Robinhood within a business day. They might ask you to verify your identity by sending in a picture of your driver's license, passport, or a related document, which can take a few more days to process. But if not, you'll have instant access to your account the day you receive a response. Once you finalize your account information, you'll be ready to make a deposit into your account and start investing. When it comes to funding your Robinhood account, you'll have to link a bank account in order to make your first deposit into the app. But you can do this in the app instantly by logging into your bank with your account credentials. Deposits from your bank typically take a few days to settle and become fully available in Robinhood, but Robinhood gives you up to $1,000 in instant deposits. This means when you make a deposit, you'll be able to start investing with up to $1,000 of that deposit while the bank transfer processes. So this is great if you're eager to get started because you'll be able to start purchasing stocks as soon as you request that first deposit. When it comes to deciding how much to invest to get started on Robinhood, you need to first consider your current financial situation and your future financial goals. Most people agree that you shouldn't be investing heavily if you've got high interest debt, if you don't have any emergency savings, or if you're not able to handle the risks of the financial markets. Any type of loan or credit card debt with an interest rate of about 7 to 8% or higher is considered high interest. Generally, you'll be saving more money paying off this debt than you would be able to make by investing. The average annual returns of the stock market when adjusted for inflation are about 7%. Considering these returns can fluctuate from year to year, it's typically a better idea to guarantee yourself the cost savings of paying off debt than hope that your investments will outpace the accumulation of interest. It's important that you have emergency savings because your investments into the stock market will not be as liquid as cash. If something expensive comes up that you haven't planned for, without emergency savings, you'll be forced to sell your investments in order to cover the costs. And when you do sell them, it can still take a few days to transfer money out of the app and into your bank account. Plus, if your investments are currently down in value, you'll end up losing money in this process, which is obviously the last thing you want. So having the safety net of an emergency fund is a good place to start before investing. And finally, investing in the stock market does not guarantee returns. I made a lot of mistakes when I started investing, and sometimes that's just part of the process. Now, I'd highly encourage you to do the appropriate research before making any investment decisions, and that can definitely prevent you from making some of these mistakes. But you should still be prepared to do some learning along the way, and that might come with a cost. People often use the rule, don't invest more than you can afford to lose, and this can be a helpful reminder as you get started. Now, I'll give you some investing tips here in a minute to help you avoid some of my mistakes, but just remember that there's always risk in investing. Whatever your goals are for investing, I would challenge you to adopt consistent and sustainable investing habits that will enable you to continue growing your wealth for years to come. The saying goes that time in the market beats timing the market, and this has been proven time and time again. If you can invest a fixed amount on a weekly or monthly basis, you'll be able to consistently enjoy the returns of the market and get the most out of your money. So choose a dollar amount or a percentage of your income that you can comfortably invest on a regular basis, and stick with it. Even if this is just a few dollars a month, it will snowball over time and make any investment worthwhile. And thanks to Robinhood's fractional shares, you can get started with as little as $1, making investing accessible and attainable for everybody. So once you've decided how much you'd like to invest and you've made your first deposit, it's time to go shopping for some stocks. Now, Robinhood offers a handful of investing avenues, such as investing in options or investing with margin. I'm not going to go over these types of investing in this video because these are riskier and more advanced investment strategies. And for the majority of investors, especially if you're new to investing in the stock market, it's safest to just stick with traditional stock investing. And there are two approaches to doing this on Robinhood. You can buy individual stocks, or you can buy exchange-traded funds, also called ETFs. I'll first walk you through what it looks like to research and purchase individual stocks on Robinhood, and then we'll take a closer look at ETFs and why you might want to consider investing in them as well. To start looking into stocks, head over to the Browse tab. From here, you can either search for a stock by name, or you can browse through lists that group stocks by things like popularity or by market sector. I'll give you some tips later in this video on what kind of stocks you might want to consider starting with. But for now, I'll show you what the research and purchasing process looks like with Coca-Cola. So I'll type in the ticker symbol for Coca-Cola, KO. The first thing you'll get when you pull up a stock is the current price of the stock and its price chart. This will simply show you how the stock has performed over time for as far back as the last 5 years. You can run your finger across the chart to see the stock's exact price on specific dates within that time frame to get a quick indicator of whether the stock has a positive long-term growth trend. Below the price chart, you'll get some basic financial information about the stock. You'll get the open, which is the price that the stock was trading at the beginning of the most recent trading day. You'll get the high, which is the highest price that the stock was trading at during the most recent trading day. You'll get the low, which is the lowest price that the stock was trading at during the most recent trading day. You'll get the 52-week high, which is the highest price the stock was trading at within the last year, and the 52-week low, which is the lowest price the stock was trading at within the last year. You'll get the volume, which tells you how many shares have been exchanged within the most recent trading day, and the average volume, which is how many shares on average are traded on a given day. You'll also find the market cap, which measures the overall value of a company by multiplying the current price of the stock by the number of outstanding shares. And I personally think the next two metrics are the most valuable ones here. PE ratio, or the price to earnings ratio, tells you how much people are paying for the stock compared to how much the company is earning. It is calculated by dividing the stock price by the earnings per share. For example, a stock with a PE of 10 means that people are paying $10 for every $1 that the company is earning. In a perfect world, a low PE ratio shows that people are paying a fair price based on the company's earnings and that the stock is a pretty good value. A high PE ratio shows that people are paying much more for a stock than the company is earning. This can be a sign that the stock is overvalued or overpriced. But there's also much more at play here, and the PE ratio isn't a perfect metric for assessing a stock's value. If you want to learn more about this, check out the video I did on PE ratio and dividend yield. And the next metric is dividend yield. This metric tells you how much cash you will receive annually for holding a stock, and it's measured as a percentage of the stock's price. So a stock with a 5% dividend yield will pay you 5% of the current stock price just for holding onto that stock. Dividend-paying stocks can be really exciting because you can earn returns by collecting dividends and by the stock appreciating in value. But just like the PE ratio, there's more behind the dividend yield that you might not see on the surface, so don't be deceived by suspiciously high dividend yields. Again, you can check out my video on PE ratio and dividend yield to learn more, or you can check out my video on dividend investing, which is a strategy that focuses on stocks with high dividend yields. But that wraps up the stats section. If you scroll down, you'll see some recent news articles that are relevant to the particular stock you're looking at, and below that, you'll see analyst ratings. This is just a quick chart that shows how stock analysts are feeling about a given stock, whether they think you should be buying a stock, holding a stock, or selling the stock. I wouldn't invest based on this rating alone, but it can be helpful to consider. Next, you'll see the small blurbs from bulls and bears. The bulls will have a quick summary of why they think the stock will go up, and the bears will have a quick summary of why they think the stock will go down. Again, I wouldn't invest on this information alone, but I personally enjoy reading both sides and weighing the pros and cons when considering an investment. Next, you'll see the company's earnings, expressed in earnings per share. In other words, they calculate the net income of the business, which is every dollar they're left with after subtracting costs and taxes and things like that, and then they divide it by the number of outstanding shares. This is a metric that measures the financial health or profitability of a business. Obviously, the higher this number is, the more money the business is earning relative to your stock holdings. The chart shows each quarter's reported earnings in bright green and the estimated earnings in faded green. This shows how accurately the company is predicting their earnings and whether they're making as much money as they expect to. Below that, you'll get a section that pushes you to check out related stocks, and then at the very bottom, a brief synopsis of the business. Overall, there's not too much information here, and that's honestly my one and only complaint with Robinhood. It can be very difficult to assess a stock on these metrics alone, unless it's a blue chip company that you can pretty safely invest in without digging too deep. So if you're looking into stocks that you're not fully familiar with, I would highly recommend doing some research elsewhere before investing. But when you are ready to lock in your investment, all you have to do is click the buy button. You can then choose to purchase in shares or in dollars if you don't want to buy a whole share, which is great for those more expensive stocks. And the easiest thing to do here is a market buy, which just instantly purchases your desired amount of stock at the best available price. If you want to get a little more technical, you can choose to set a buy order. This way your purchase only triggers when certain conditions are met. With a limit order, you can set the maximum price you're willing to pay for a stock. Your buy order will then trigger as soon as the stock drops below that price. With a stop order, you can choose a price above the current price, and it will only trigger a buy if the stock moves up to that price level. This can help you catch a stock that you think is going to make a run upwards before that price movement is complete. With a trailing stop order, your purchase price follows the stock price at a set amount. If the stock breaks out of that trend, it will trigger your buy order, again hopefully catching a stock as it's breaking upwards. And lastly, a stop limit order is a combination of a stop and a limit order. You first set a stop price, which means once the stock price moves up to your desired price point, it'll activate your limit order, which means once it gets up to that stop price and then back down to your limit price, the purchase will be triggered. Although honestly, if you're investing for the long term and you're not trading particularly volatile stocks, You don't need to be too worried about the special order types, and you can probably get away with just placing market orders. But at this point, you should be ready to purchase your first stock. And selling is just as easy should you ever decide to unload your stocks and move your profits into other areas. Before you jump in though, let me give you a quick explanation of ETFs, and then we'll wrap things up with some Robinhood investing tips. So ETFs are a great way to invest as a beginner. ETF stands for Exchange Traded Funds, and these are essentially tons of stocks wrapped up into a single purchase. So when you purchase a share of an ETF, your money gets diversified into all of the underlying stocks. This helps you instantly diversify your portfolio among large parts of the market, which will protect you from selecting stocks that might underperform and will make sure that you earn your fair share of the market's returns. However, not all ETFs are created equal. Some are built around dividend stocks, some are built around specific sectors of the market like tech, and some just hold whatever stocks the fund manager thinks will do well in the short term. I dove deep into the ETF strategy in my summary of the Little Book of Common Sense Investing, so if you want to get into the nitty-gritty, that's a great place to learn. But if not, generally speaking, the more stocks that your ETF holds, the more stable and reliable of an investment it will be. And unfortunately, the stocks in a given ETF isn't something you can find on Robinhood, so again, you'll have to do your research elsewhere before investing. But I would suggest starting with something by Vanguard, which is known for its low-cost ETFs. Some of these include VTI, Vanguard's Total Market Index Fund, which diversifies your investment across the entire stock market, or VOO, which diversifies into the S&P 500. And finally, here are a few tips to remember as you get started with investing on Robinhood. First, don't blindly chase high dividend paying stocks. This is a tempting mistake to make, and believe me, I've been there. But there are 3 problems with this investing approach. First, a high dividend yield might be an artificial measurement because of the way it's calculated. Second, the dividend yield might not be accurate based on the stock's price movement. And third, and perhaps most importantly, is that some types of dividends are taxed differently. There are a handful of types of stocks, such as REITs, that offer high dividends, but they're taxed as income. So this extra tax will cut down on your returns and might make them worth less than an average dividend yielding stock. And Robinhood won't tell you if your stock falls into one of these categories, which is why you need to do your research before investing. And second, be aware of the hidden costs of stocks and ETFs. Like I just said, some stock dividends are taxed at higher rates, so you need to look out for those. And if you're investing in ETFs, be aware that many of these have management fees. This means they'll take a percentage of your investment in order to manage the fund and all of the assets your money is diversified into. The Vanguard ETFs I mentioned earlier have fees of 0.04%, which is about as low as they get. Management fees higher than 1% or even 0.5% can really cost you a lot in the long term. And third, beware of penny stocks or other volatile stocks. Buying a stock that is cheap doesn't mean it will make you more money than buying a good stock that has a high price tag. I've been here too, and it can be tempting to think that a stock can go from $1 to $2 and double your money. But these are long-term investments, and you can rest much easier investing in quality companies that you know and understand. Lastly, don't be afraid to do your research and keep learning. There's so much information out there about investing, and it's just ripe for the taking. If you learn about your investments, learn about their tax consequences, and if you're just ready to explore, you will have a much more fruitful investing journey. And if you want to learn more about anything we talked about today, be sure to check out some of the other videos on my channel or drop me a comment below. And if you're just getting started on Robinhood, make sure you subscribe to the channel because I'm going to be creating a lot more videos about the Robinhood app and I wouldn't want you to miss it. Happy investing, and I'll see you next time.